Welcome back, everyone. I am thrilled to have Brittany Somerville here with me today. Nice to have you here.
Thanks so much for having me.
I am so excited, guys. Brittany impressed me from the first time that I met her through a current client of mine, just by her process as a mortgage specialist. I got to see her work before I met her, and I was like, I gotta meet this lady. So I instantly connected with Brittany as a lender here in the Raleigh area, and we had a conversation, and it's been fun ever since. We get along, we understand this industry, and we both have a similar passion for the mortgage world. So I'm excited. Brittany, how you doing?
I'm doing so well. Thank you so much.
Good. Thank you for being here.
Thanks for having me. I feel like we should rename this Bri and Brittany Geek Out on Real Estate or something.
Well, let's do it. Let's do it. She will be here consistently bringing us the market updates. As we know, guys, the key part of buying a property is financing. So knowing the market, knowing what's going on in the mortgage industry is one of the main parts of being successful. So Brittany will be here with us quite often.
I'm excited. Thank you so much.
So why don't you tell everybody about yourself?
So my name is Brittany Somerville. I have been a residential mortgage loan officer for 5 years now. I just had my anniversary in December, and I absolutely love it. Buying a home is typically the third most stressful life event someone goes through after losing a loved one or divorce. So taking away some of that stress ahead of the game prior to going under contract and just making it a smooth transaction is my goal, and I just absolutely love it.
Yeah, I agree. Me personally, it's all about allowing someone to know that this can be a fun, process. It can be a stress-free. We can create that plan and strategy for the client so that they don't have to be maybe some of those horror stories that they told, right?
Sure.
So in the industry for 5 years, what brought you to the mortgage? Tell us about that.
Well, I used to be a head lunch lady. I worked in contract food service management. So I was a head lunch lady at different colleges and for 8 years. And it just took the life out of me, and I just became a dark person. I didn't like where I was. I was just super, super miserable. So I did everything you're not supposed to do. I quit my job without having a backup plan. I closed out my 401k so I can keep my student debt on time. And I moved in with my sister. And my brother-in-law, he's a loan officer, and he would sit at home in his boxers, driving around in an Audi, working on his computer, and I was like, well, tell me more. And so
what do you do?
Yeah, I want to do that. So I loved what he said, and I got my license, and I interviewed with a bunch of companies, and Equity Resources was wonderful and had a wonderful training program because I didn't know what a mortgage entailed at all, coming from food service. But I really love the combination of people skills and numbers and just being able to put them together. So it's been wonderful, and I'll never look back.
Yeah, that's like I said, it's like the universe brought us together. One of the same colleges we both worked for extensive time. We know some of the same people. We weren't there at the same time, a few years apart, but that's how we kindled our relationship. We were naming different people from the college and how we knew them. And so just to know that we've crossed paths and we have something very similar. Myself, I was in the corporate world. I'm a business major, and no matter how much of a good corporate job I would get, I never felt like I belonged. I never felt like I woke up with a passion or a purpose to really do that. And I got laid off, and I jumped into real estate my first year. I did a little bit of planning. It wasn't as risque, but jumped in and went full force and loved it. And here I am 5 years later too. My anniversary was this month.
Good for you.
So
that's awesome.
Again, same timeline, similar background. And so I love to work with like-minded people and build those relationships. So if you're getting value out of this show and the podcast in general, I want you to subscribe, hit that notify bell button so you're notified when we have new episodes coming up. And listen, this podcast is for you. So comment below. Tell us what y'all want to hear. We want to make sure that you're updated on the real estate market. We want to know, what are y'all out here looking for? We want to give you the tea first. Real estate, guys. Straight up, no chaser. So today, guys, we want to really dive into the mortgage industry. Everybody has their ear to the wall. They want to know, what is 2024 going to look like? You hear the Fed saying that mortgage rates are going to drop, the predictions, right? At least 3 mortgage rates dropped. But what does that look like? How does that impact you? And so Brittany, as a specialist in the mortgage industry daily, she's going to give us some insight on a few things today. But before we go there, I want you just to give me a perspective of last year. What made your buyers successful, those who did purchase and was able to get financing? What would you say were the key indicators of their success?
Well, like I said, I've been doing this 5 years, so I've seen a lot of ebbs and flows. I was in it during COVID. Last year was a tough year in real estate overall. And when interest rates go up, folks shy away or don't want to get rid of their 2 and 3% interest rates. And I completely understand. But the competition is much less as well, and you're not having to pay over asking or huge due diligence deposits. So last year, as difficult as it could look like, it really was a benefit for those who bought, because when interest rates drop this
Correct.
year, values are going to increase, and those folks that bought last year are going to see the benefits.
Correct.
For sure. Correct. So it was a wonderful time to buy. I mean, anytime. Yesterday is always the best time to buy, right?
Correct.
So I think the folks that bought last year really made smart decisions.
I do too. I think that, the interest rate, yes, that goes into buying a property, but the process, most of my buyers, they weren't as stressed as the prior 2 years we were in the market. They were able to get their eyes on something, have a real conversation with the seller's agent, right? Actually communicate back and forth as to where we're headed to, because I got a prediction for y'all. It's starting to change already. Where we're headed to, listing agents will instantly reply, I'll submit an offer, and they'll say, oh, we have 2 to 3 offers already. We're booked for the weekend, and we'll get back to you on Monday, letting you know that you're either not the best offer, because they do communicate in ways to let you know where you are, or hey, the ball is in our court and we'll deal with you accordingly. So buyers didn't deal with that as much this year. So people have to understand the benefits as a whole to the mortgage or the interest rates when it comes to a mortgage, right?
Absolutely.
Yeah. So thank you for sharing your insight on last year. I think buyers who are just coming back into the market, who maybe have bought and are getting ready to get back into it, they need to kind of understand where we've been so they can wrap their heads on where we're going, right?
Sure. I mean, if you're sitting on the sidelines waiting for interest rates to drop, just know a lot of other people are doing the same. Yeah. So if financially it makes sense for you to buy today, I mean, it take advantage for sure.
Correct. And again, like she said, it's what we say. They said, when is the best time to buy? When you can afford to. And that really means what it says, when you can afford to, when you financially have your down payment, when the interest rate and the mortgage works for you. You're not going to be house poor. You found the house that you want. That's your time. Everybody's timing is going to be different.
Agreed.
Yeah, so let's talk about a few different things that could help buyers understand going forward if maybe they've been out of the game for a while or they're just coming into the game. What are the key factors that go into an interest rate fluctuating? Why did we see what we saw last year?
Sure. So, I mean, I get asked all the time, what are interest rates doing? And it's just such a loaded question, and so many parts impact it. So interest rates will change month, week, day, even within the day, multiple times. We have trackers, we have mortgage gurus that advise what they think is going to happen, but no one truly has a crystal ball. So last year, when we hit around summertime, we thought we hit the ceiling in the 7s and we capped at, interest rates in the 7s. Well, a few months ago, we hit the 8s. Wow. So, and no one saw that coming. So we're comfortably going back down and trending towards the 6s now, hopefully towards the 5s and 4s going forward. But today's interest rates are average. Yeah. The days of 2 and 3% interest rates are out the window. So we're back to where we should be.
Yeah, I agree. This is not the first time we've seen interest rates at this peak. And what I say again is those people who made the decisions when I remember, the last 2 or 3 years, my sellers who were selling, when I would see their payoff statement, they were in the 5s and 6s. So, but those are the same people who made 6 figures or more on selling their home and was able to buy and put a down payment and then have a savings. So it's all about your time, not always when the market tells you to.
Sure. And I mean, COVID, no one expected that. So interest rates are going to be fluctuating based off supply, demand, economy, political changes, war. COVID, unfortunately, was a worldwide virus that we never seen before. The economy tanked, people lost jobs. So to encourage folks to buy and build up that economy, that's why rates were so low. Once stimulus checks started getting in place and people started getting crafty with jobs or started working from home, the economy started building, so rates started increasing. This year being an election year, we are hopeful that, historically, rates drop during election years. So we are expecting that to happen this year yet. And wars in Ukraine and all of these things that aren't, thought of or fortune told, they're just hard to predict. So that's all of these big events have huge impacts on interest rates and why it's just very hard to predict.
Yeah, and I think, again, you compare it to the stock market, right? The economy fluctuates. There's times when people said, I wish I would have bought Amazon in whatever year. I wish I would have. And during most of those times, the economy wasn't doing that well, right? And so those are predictors, those are indicators of what happens. Again, you have to make your time and take advantage of when it's best for you.
Correct.
Yeah.
And you're not stuck with an interest rate for the life of the loan. You can absolutely refinance when rates drop. When you buy a house, the purchase price doesn't fluctuate after you close. So take advantage while you can, as long as it makes financial sense for you.
Yeah, especially when we look at the market, and this is, really disheartening for me. I have some clients that we've been working together, communicating, staying updated for 3 years now, and they finally decided to pull the trigger in the last 30 days. And they've had that same job for 3 years, right? So the income's been about the same, maybe a little different. We get raises. So they could afforded to buy 2 years or 3 years ago. They're priced out now.
Yes. And especially in the Raleigh market, values are going to appraise every year, even when we have a slow year. So that's something to consider for sure.
Yeah, understanding where you're located. So everywhere you buy real estate has its own hyper-local real estate activity. If you want to go to rural South Carolina, where there's nothing within 15 miles of you, we may be able to start to say, oh, I want this $50,000 investment property. But you're in our area, the number 2 to 3 place to live by U.S. World News. That means that there is assets here. Real estate is an asset. And so when my clients come from D.C. paying $5,000 a month in rent, they don't blink when they buy a house here.
Right.
Lower taxes. So just really understanding the market that you're in, whether it be in California or Virginia, understand the activity in your market. What is the economy like there? Because that is what's going to indicate the price point of where you live.
Yeah, I read somewhere that something like 67 families are moving to the Raleigh area every single day. It's mind-blowing. It's a booming market for sure.
Yeah, I can believe it. So can you explain, I think a lot of people, when they're shopping, they get pre-approved and they say ABC lender is offering me a 6%, DEF lender is offering me a 5.5. Can we talk about interest rate versus APR?
Yes. So I'm in sales, but I always joke I'm the worst salesperson ever. I always encourage folks to shop. Not every personality will get along, and not every lender has the same products or the one that would work best for that buyer. So I do have a good referral group of lenders that I know what they can offer and I can't, or if they have a program that better suits someone else. I like to be that one-stop shop. Come to me, I'll see what I can do, and then if I can't do it or I know someone else can do it better, I'll send them that way. So, there's brokers, there's retail lenders, and there's online lenders. And brokers, they have a book of lenders that they send their files to and outsource all of the process. I am a retail lender. We have everything in-house. I have direct access to my underwriters. We have control of the appraisal, the whole process. And then you have your online lenders. So if you are looking for the lowest interest rate, I guarantee you an online lender or a call center is going to offer you the best interest rate. You get what you pay for. You probably won't have the same loan officer or be able to contact them at every day or anytime that you need them. I'm not even sure you will close on time. But when you're comparing quotes, make sure you take into consideration service as well as the interest rate and cost, and work with someone you know and trust, because really in the end that's really what matters.
And that's why these relationships happen. And what she says, I cannot echo the sentiment enough. The first thing I tell my clients when they come with the out-of-state lender or a online lender, I'm like, local, because they understand our market. We have something called due diligence, guys, non-refundable money that you have to put out to make an offer in our area in the state of North Carolina. And so other states don't have that. They have what you all know called earnest money, refundable up to a certain point. So a lot of people go home shopping. They put the home under contract because they know I have at least 2 weeks to do what I want to do and I'll get my money back. In the state of North Carolina, due diligence is non-refundable. If your offer is accepted and you deliver that money, which if you get your offer accepted and you ratify the contract, you're supposed to deliver that money. If you blink the next morning because the house is not facing in the direction you want, that money is non-refundable. Out-of-state lenders don't understand that. I just had that happen at the end of the year with some buyers that'll be talking to you guys on another episode. I'm educating a seasoned lender who's been in the game longer than me on what is due diligence, and he has my clients under contract almost a week out of their closing date. Past their closing date. So yeah, understanding that quality over quantity is a big deal.
Agreed. A lot of my job is done on the computer, email, phone. So a lot of the times I only first meet the client at closing table, which is wonderful. With an out-of-state lender or someone that you don't have contact with, you're not able to build that relationship. And you shouldn't be treated as a transaction or a number. You're a person, and I truly value that in building those relationships, and you can't do that if you're not local.
Yeah, I agree. And again, local wants to maintain a reputation in the community, so they're going to work to build that relationship. So what about refis? What I'm seeing right now is to get the competitive edge, lenders are offering a free refi at some point once rates go down. Talk about that.
Sure. So it makes me chuckle every time I see someone offering a no cost or free refi with no closing cost. I guarantee you there will not be an attorney who will do a closing for free, an appraiser who will do their job for free. The lending company, no matter what they're saying, they are not giving you a free product. What I'm assuming they're referring to is being able to roll in the closing cost when you are refinancing, which is something you cannot do with a purchase. So you can certainly refi and go to the closing table and not pay anything out of pocket, but it's being built into the loan amount. And a big way to be able to measure that is from your APR listed on your quote. So your APR, your annual percentage rate, is a measurement of your interest rate plus closing cost involved. So the bigger the space in between your APR and interest rates, the more cost involved. And I guarantee that APR will always be higher than your interest rate. And if it was truly a no-cost refi, they would be the same.
Wow. Y'all heard it, right? That's why you need her on your team, guys. You straight up, no chaser, and I'm telling you, as much as I love lenders, y'all are my friends, everyone doesn't want to share this type of information. So we're going to make sure y'all have Brittany's info, reach out to her so she can make sure that, especially if you're relocating here, you have a quality loan officer who's willing to really give it to you straight up so you can make the decisions you need. Thanks. So let's talk about getting prepared, right? What I spend often with relocation clients or clients who maybe have bought 3 to 5 years ago, they come back in with the same mentality that they left, and the market is not where they used to be. So what advice would you give people for re-entering the market to get prepared?
Truly have good conversations with professionals that you know and trust before doing your research or looking at houses. Guidelines and markets change drastically, especially here in Raleigh. So if you bought 5-10 years ago, it's a whole different market. It's a whole different game. Get truly pre-approved. Start as early as you'd like. That way you are truly prepared once you do find that home, whether it's tomorrow, a week, a month, 6 months from now. There's no harm in getting prepared and getting truly pre-approved prior to looking at houses.
Yeah, I'm not sure why people are so kind of, I don't want to say scared, but cautioned about having a conversation about a pre-approval. Of course, maybe, credit-wise, you may not feel you're in the place that you want to be in, right? Or maybe you don't think you have the down payment. But what I want you to understand is the only way you can get the plan is by talking to the loan officer. I have people who come to me, they've been for a year creating a plan in their head. And they come to you and tell you this whole plan they got in their head. They'll say, yeah, I'm going to buy a house for $200,000. I'm going to buy it in so-and-so town, and I'm going to do this and this. And I said, okay, let's get you pre-approved. And then we come back, and that whole thing they had created is not the plan that we get to go with.
Sure. I mean, I run into that a lot where someone thinks their credit score is somewhere and it's really somewhere else. Wherever you get your credit score, the algorithm for a mortgage is going to be different. So if you bought a car, which don't do if you're buying a house, but if you bought a car, got insurance, and bought a house all on the same day, your credit score with all of those 3 different people would be different because it's just different algorithms. So it is vulnerable because you are pretty much giving me your whole life, in paper form, and we're dissecting it and making sure you're financially able to pay this mortgage. So setting those realistic expectations up front is key. And if we need to do credit repair or you need to save a little bit more money, then that gives us time to do so as long as you're preparing ahead of time.
Correct. And now you can walk away knowing, okay, I qualify for this. I need to do these 2 things in the next 3 to 6 months, and then I'm ready to go. You're still eyeing the market. You now have your price, so you can eye homes in that price point, areas that fit your need, and you can keep a dial in while you're working. So you're still ahead of the other people who have not made those steps. You're ready. You're actively working towards the goal, and you're ready to go when your time comes.
Right. Agreed.
Yeah. So thank you so much. I think that you've covered a lot. Interest rates, refinancing, getting prepared, those things are really key right now. As the market gets ready to change, I'm working with clients, guys, put in an offer last night, and I'm starting to hear those things. Multiple offers. Talk to you on Monday. So for those of you who did not move this year, get prepared and get ready for competition. Okay? If you're competitive, this is the year for you. You need to come actively ready to be aggressive, to work with the agent who knows what they're talking about and be able to trust that agent is guiding you properly, because this is not the time to go look at a home on a Saturday and say, I'll let you know on Tuesday. That's not going to work for you, and you're going to be in the market for quite some time. And as you wait, your choices are going to become slimmer and slimmer. So continue to dial into keeping in real estate as Brittany and I keep you all up on the mortgage options and what's going on in the industry. And also reach out, have a conversation, get prepared. So thank you so much for joining us, and welcome again.
Thank you so much.
I'm excited to continue to learn more through you. And in a good way, you just are willing to share, so I'm excited for that.
Yeah, I'm an open book, honestly, and there's no cost for my services until closing, so even just as a resource, or if you have any questions, I'm here.
Yeah, my type of girl. So she's willing to share information. Next episode, guys, we will get to talk to those buyers and sellers who just closed. They were my last clients of 2023. So they're fresh out of the game. They're going to be able to give you a perspective on what it took to make it happen in one of the toughest years of real estate. So again, if you guys are enjoying this podcast, make sure you subscribe, hit that notify button, and make sure you're notified when the episodes come up. We thank y'all for your time. Until next time, right? Stay informed, stay inspired, and most of all, keep it real, y'all. Thank y'all so much. Have a good one.